If I zoom into this chart a little bit, you'll be able to see the bids and the offers. You'll be able to see what we should be doing, right? Simple as that. We should be able to see very clearly what we should be doing. So when I see what we should be doing, well, I start looking for my bids. So I know if these lines are in the blue zone, I should be bidding into sell side liquidity. If these lines are in the red zone, I should be offering into buy side liquidity. If these lines are in the blue zone, I should be bidding into sell side liquidity. I mean, it's not more any complicated than that, guys. A lot of people think it is more complicated. It's not. It actually really isn't any more complicated than that, right? So if I highlight this area, so we could start looking at this area here. If I can look to the right-hand side of that area, now we could look earlier, but it's okay. It's still dropping into this area. We start seeing it. It's not likely to be able to go any further, so we know that that's now going to have to turn. This is already through the top edges here of all three red lines, so it's not likely to go any further, so I can mark that price and say, right, we're in that zone. And we've got two lines that are as low as they're likely to get, and therefore we start looking to bid into this, right? That's us. We're finished. We're literally finished with that piece of information. I'm going to bid into sell side liquidity on the right-hand side here. I'm going to offer into buy side liquidity on the right-hand side here. And I'm going to offer into buy side liquidity, sorry, sell side liquidity on the right side here. Does anybody not understand that? Does everybody agree with that? This isn't the trade. This here is not the trade because we don't know if the buyers are going to come in. This here is not the trade. We don't know if sellers are going to come in. This isn't the trade. We don't know if buyers are coming in. I really was quite strong on this on last night's tweet. We kind of gave you a little checklist. And the checklist was very, very straightforward. I hope everybody understood it. Crystal clear volatility roll today. Don't lose sight of the massively influential R-squareds making up your trading day. 1, find liquidity. 2, decide what they will do with the liquidity. 3, and this is very important, see them doing what you thought they were going to do in the first place, right? 4, get to work. So now we've got the buy trade here. We're now waiting for our buy trade. Now we've got a sell trade. We're waiting for a sell trade. Now we're waiting for a buy trade. So now that that's the case, I can now go to my charts and start looking to where I'm going to bid for these things. Let's take a look at these 3 price trade areas. Okay, do you see them? So to the right of this line, to the right of that line, I've got a price low, right? There it is. There's the price low right there. And there's my sweep liquidity starting to show up in here, isn't it? And then I've got another sweep liquidity showing up in there, haven't I? So to the right-hand side, we've seen them doing what we want them to do. So we join in. We've seen sell-side liquidity coming into the market there, and we're able to look at that and say, right, we've got a liquidity sweep here, and we've got a liquidity sweep here. It's not just a liquidity pool, it's a liquidity sweep because there's value in this selling liquidity. So if there's value in this sell-side liquidity, I'm now looking for the price to sweep through this, and then I'm looking for a buyer to lean against, or a seller to lean against, or any type of order flow. It could be a imbalanced buy side, or it could be a sell side jam. So we're bidding into this. And if the trade is still valid, and it is in there, very definitely still valid in there, we go again. We simply go again and we bid for this stuff. In other words, we've got bids. It's only bids in this area. This is a biddable area. Into the top edge, we can see we get a lot of sell side value. At the same time, we actually get a sweep. So that's called a sweep. That is now called an actual sweep now there, right there. And it comes from a flush trade, doesn't it? Mike's going to love that one. So there's your buy side liquidity. There's your buy side liquidity that got that sell going. And it comes from this candle here, doesn't it? And that's what we call the fake out candle. Well, we chatted about this fake out candle earlier on today. Now, we never got a fake out candle on this one because you can see it kind of came from that sale originally. So there wasn't really a fake out into this. So, but there's definitely a fake out candle for that one. So because there's a fake out candle there, we can additionally add to our storylines in here. We can build a little bit more chart narrative. We can call this a flush. And this flush is a very important sell price. Obviously, the idea is we want to sell up here, but if we miss that opportunity, we definitely want to pay attention to this trade because we should be able to make money selling against that trade if we get a sell value. And you can see at the very bottom of that chart, we do get a sell value clicking into that trade area. It's at a high price. The buyers aren't going to be interested in buying at that high price. These are commercial lines. Remember, these traders buy at lower prices or sell at higher prices. They do not buy at higher prices. So when we look at that trade there is a sellable click available to sell into. It's good to go. There's also a sell side order block there if you wanted to paint that as an order block. And you can see just how good this narrative is. The sell comes in at the top edge. We get that sweep into the top edge. It tests the top edge again there. And you're able to find a little short-term liquidity sweep there. And you're absolutely annihilating the sell side market down to a price that we get a buy trigger. And at the same time as we get a buy trigger, we get a liquidity sweep. So we can now define this as a liquidity sweep. If this is a liquidity sweep, it means that we are using the sell side order flow. We're using the sell side order flow to get long into. Now, on the way down, it's very difficult to buy that. So we're really wanting to buy it on the way up or on a retest. Same as this one, buy it on the way up or on a retest. Or on a lean or something in the order flow world. So we get a brilliant retest in here and it's good to go. We've got two of them inside the buy zone there. As I said, commercials buy on downticks, so they're looking to buy this. It ran the sweep into that area, and we got a beautiful buy side pop into this flush price. Now, was this candle here a manipulation candle? I don't think it was. But if it was, it didn't make any difference. Why? Because if we took that candle and says, right, well, that's a manipulation price, you would have been selling into that area there anyway. So it wouldn't have made any difference. You would have been selling there and then buying back in here. Doesn't make any difference. If it breaks through that area, you're looking to buy into this and then go bid. And if that was the case, you also got exactly the same trade. You bought into this candle and then you went bid and you made money. So it didn't make any difference how you interpreted that. You made money regardless. So this is the way we interpret these things. But we should also be looking at these things from multiple bigger time frames. This is the whole point about that top-down analysis of looking at the hourlies into the dailies and finding those liquidity areas. So when we look at oil, it's very important, and how many people haven't looked at their hourly chart in the last hour? It's very important that you look at your hourly charts every hour to try and make sure you don't lose sight of some of these big areas. One of the things we can recognize is this is a commercial buy zone. Can everybody agree that there was a commercial buy zone here that you'd have been marking off your screens? Well, that's a technical commercial buy zone. We haven't checked to see whether it verifies with value at that stage, but it doesn't matter. It's still something that we absolutely know existed on the hourlies. So we definitely shouldn't be losing sight of it. That's for sure. So if we knew that there was an hourly commercial buy zone in here, you're very aware of the fact that it's there. So when you go down into that 5-minute chart, you're now looking at that saying, what does that big shaded area below me here? Oh shit, that's that big buy zone from the background, isn't it? That's that big commercial buyer that we came in from that big balance drive away from this price area here, isn't it? And it doesn't go away. It doesn't become invisible to you because you're making sure you're always asking that question. It doesn't mean you're a buyer at it. It just means you're aware of it. And should the commercials have buy side value available at this price, you'd imagine the commercials would come back in and buy it again. Well, they did have buy-side value. We just checked that on the R-squareds. They had buy-side value, and that's all you could ever imagine. You simply saw the buy-side value coming in here. You saw the liquidity sweep, and you start dealing. You saw the liquidity sweep, you started dealing. You saw the liquidity sweep here, you started to deal. So in other words, you got the buyers coming in, made life easy. Buyers coming in, made life easy. Buyers coming in, made life easy. So when we look at these as R-squared questions, we can obviously start going into these as narratives. The idea is, of course, we need to see whether we agree with these. So that's the most important aspect of any of this trade. Whether we agree with them or not, we can obviously start diving into the question, what is RBOB actually doing? For example, how much has RBOB priced in? And this is a great example of a question we were talking about today. A lot of people will look at this and say, there's no way I could buy this. Really? There's no way you could buy this. I know that in the short term, it definitely is going to be one of those riskier trades, and you definitely don't want to buy it on the way down, and you maybe want to consider buying it on the way up. But there's no way you can buy this. Let's take a look at this in the background. If that's the low swing of RBOB and that's the high swing of RBOB, my normal business would be to re-anchor the price action at that point. So I would bring the low price of my candle there, the closing price low of my candle there, and I would take my closing price of the candle up to this point, right? That's close enough. Doesn't have to be exact. Now tell me if this price is discounted against RBOB or premiumed. Massively discounted, right? So this is massively discounted already. So based on that relative value assessment from that bigger picture macro, we've got a massive discount on oil just now. So yes, whilst there is absolutely no question about that short-term press, and we know that the short term is the most important in the short term selling is working against that macro discount. So I can still buy macro low prices. It doesn't stop me buying macro low. And obviously, if the short-term value started to improve, we now know that the bottom edge is now the best trade in the world. By a mile, it's the best trade in the world, right? So we had a lot of questions about that this morning, about making sure that you've properly priced this, right? So it's very, very important that we know that type of stuff, that we've repriced the market properly. We've managed to make sure that the market is priced up the way it should be on a bigger picture chart and on the shorter term picture, to make sure that the short term either is agreeing or disagreeing with the long term picture. These are all very important considerations for our trading going forward. And that's all we can ever do with these things, right? If we're trying to think about these as structures, we need to know what the structure is. We need to do this work. It's not that easy. When I look at this balance area in line with the max, another one of the questions, of course, is which side of the book does Max believe is the easy side? Which side is dominated by the market makers, and which side is dominated by the dark side, by the citadels of the world? Well, we can take a look at it and we can try and answer that question. Okay, so you can see that the sell side is dominated by Max here. So it'd be very easy to be short in this. There's also a significant switch off by the algorithms as well, isn't there? So because of that, this should be an easy buy trade. It's not brilliant, but it's an easy buy trade because of the size of divergence that we've got in here. The top edge sell's really problematic at this stage, really problematic. So you really had to wait for that price to roll over before you started to get into that business of selling this. And you got a good response. In fact, you got a safe trade. See the bread and butter sell trade here? It's not the best bread and butter trade. It's the second best bread and butter trade. We talked about that this morning in classroom, where we diagrammed what the best was and what the second best was. Do you remember the conversation? So this was the diagram here, the low entropy, high energy, go with it trade. The best one was blue over black and parallel shifting to the downside. This is blue. This is black over blue. This is black over blue and shifting to the downside. So that's not the best trade. It's the second best trade. So when the price comes up and then turns back down, it leaves behind this imbalance. So selling it on the way back down makes perfect sense. You're going to make money on it, and you're going to be able to take advantage of that little bit of a press. But you've got to sell it on the way back down again. You're going to be targeting the spread capture. Spread capture is going to be down here. And as you capture the spread, you can see that the blue line is below the black line. It's still parallel shifting, but it is below the black line. So in other words, this should be an easier buy trade than the normal. On the basis that it's an easier buy trade, you get ready to do business. It's lower than this pink zone here, so it should be even easier. I don't think there's any difficulty about buying that at that stage. The concern is this one, you know, because obviously we've came off here, and that's made the sell trade easier than the buy trade. So obviously if the sell trade's easier than the buy trade, we're then running back up in towards this flush area here, and it becomes relatively easy to get that short sell into that flush area there. And the price goes away. Now you can see here, this is a very good sell trade here. See it? A very good sell. Now, the only concerns I've got is the divergence that we've got in the background. We didn't have divergence here. We had continuation here, right? So that's the only concern I've got about this. There's a divergence in the background here. It's not a momentum sell. So we've got to be careful with this. But we've got this imbalance. We've got a great opportunity to sell at that price. So that's the price you should be looking to get short into for the press. Right there. Does that make sense? Now, that still has to line up with value. There still has to be value in it. There still has to be a reason why we think things will happen. But that's how you would be trading this as a basic idea. Now, as I said, I don't like this one very much because there's a momentum difference compared to this one. This one looks very good indeed, with the caveat that the two lines are both driving. This one looks better because the black line's below the blue line, whereas the blue line's below the black line here, but the black line is quite clearly diverging against similar price points, and therefore there's always a chance that somebody is buying the low price. The black line is not necessarily a massive driver here, but it's definitely driving. That's for sure. Both lines are going down. It's driving. It's a sell side only trade until we get into bottom edge liquidity. But I'm not going to be selling at the bottom edges. I'm not going to be selling in here with this situation here. See the difference with this buy trade here? The black line's above the blue line. It looks like the momentum shift is positive here, so I don't see any problem with that as a buy trade. That's the bread and butter buy right there. Does that make sense? That's bread and butter buy. Black over blue rising. Black over blue rising. No noticeable divergence. Looks very, very bullish. That should be an easy buy trade to make money from. And obviously that trade's target is capturing the spread up here, which it easily does without any trouble. Nice way to make $250 in 3 minutes, isn't it? Sorry, it's a 5-minute chart, 15 minutes. Nice. So let's see if we can get this punch through the bottom edges here. That would be nice to see that happening at 85.30, wouldn't it? Very little value so far for equity cash open, though, isn't it? It's been Sleepyville.